Hi team, today we're going to go over how to do a worksheet. The point of a worksheet is to aid in the preparation of financial statements, so we're able to adjust our accounts and come up with our financial statement numbers faster so that we can get those out to our creditors or our lenders, whoever needs them. So I have on here just a sample worksheet. I went ahead and plugged in some unadjusted numbers for us. So these would be numbers at December 31st or whatever the end of our period is. So you can see we have $130 in cash, $20 in accounts receivable, all the way down. An important thing to note is that our totals balance. So our debits equal our credits. If your debits don't equal your credits, do not move forward. A number that seems to mess people up a lot here is withdrawals. So remember that withdrawals has a normal debit balance because it's a contra equity account. So it works in the opposite way of an equity account. Just one little tip before moving forward. If you're off, if your numbers at the bottom don't equal, take the difference and divide by 2. So I'm just gonna kind of move into la la land here. Let's pretend that I had that $25 in the wrong column. It will throw me off double. So we would take that $450 minus the $500. That would be $50 off, right? And then take that 50 and divide by 2 would give you 25. So then you would scroll through here and say, do I have any amounts that are 25? We would see this withdrawals and we would say, oh man, that should be a debit. And we would put that over here in the debit column. So if you're off, take the difference, divide by 2, and then see if you have anything that might be in the wrong column. Okay, so once you have all your debits and your credits plugged in and you're in balance, then you're ready to move into your adjustments. We're doing Addie's Snow Removal Company today, and they have 3 adjustments that they need to make. The first one is annual depreciation on the snow plowing equipment is $20. So we can see here in depreciation expense that no depreciation has been recorded yet this year. There is an amount in accumulated depreciation, but that would be carrying forward from a prior period if there's nothing in depreciation expense. So we need to record the full amount. The reason there's only $10 instead of $20 is because they would have recorded half of a year, so they must have purchased that equipment in July. So we need to record the full amount. Remember, whenever we record the journal entry for depreciation, it's a debit to depreciation expense. So debit $20 depreciation expense and a credit to accumulated depreciation. So debit $20 depreciation expense and then credit $20 accumulated depreciation. So just like a regular journal entry, you have to have a debit and a credit. Sometimes it helps when you're starting the worksheet to just write out what your actual journal entries are. So if you feel like your brain is having a hard time making the jump, you might want to just write out the journal entries that you've been doing already. So you could just write this out. So you have debit depreciation expense, credit accumulated depreciation for 20, and then plug those in here. That would be totally fine. Okay, so let me delete those. All right, so on to our next one. Accrued salaries are $15. So that means we've incurred salaries expense of $15, but we haven't paid it yet. So we would do a debit here to salaries expense. So debit salaries expense for $15, and then credit salaries payable for $15. So debit salaries expense, credit salaries payable. And then our last one, unearned revenue of $10 has been earned. So now we've earned $10 of revenue, so that's going to show up here in revenue. So we're going to credit revenue, increase the revenue account. So increase revenue by 10, and then we're going to decrease unearned revenue. So we had $40, but we're going to decrease it by 10, so we'll see that we're going to end up with 30 over here next. Okay, so that takes care of our 3 adjustments. So our next step is to take our unadjusted plus or minus our adjustments to equal our adjusted. So I have a formula built just so that this would be a little bit faster. So I'm going to go ahead and plug that in. And then I'll just walk you through each one. So you can see that we had cash of 130 plus or minus nothing led to 130. Same thing for accounts receivable. If we look at accumulated depreciation, we had a $10 credit. We added a $20 credit because a credit plus a credit equals a higher credit, a $30 credit. If we look at this next one, unearned plow revenue, we had a $40 credit minus a $10 debit, right? Debits decrease liability accounts, and that left us with $30. That makes sense because it was unearned revenue of 40, but we earned 10, so now we only have 30 left. Okay, so we can see that goes all the way through. Oh, and then one other thing is we need to have totals all the way. So I'm going to carry this formula all the way over. So we do want to make sure that before we move on from our adjustments, that those columns balance, debits equal credits, and they do. And then also very important when we get to adjusted, that our debits equal our credits. So if they don't move forward because nothing else will work. You have to make sure that they are in balance. And again, this right here in the adjusted, you can do that subtracting and divide by 2 trick. In your adjustments, if you're not in balance, it's probably because you dropped half of your journal entry. Okay, so once you have your adjusted columns filled out, then these exact numbers just push into the income statement or balance sheet columns. And you can draw a line between withdrawals and snowplowing revenue. So withdrawals and whatever your first revenue account is. So everything from withdrawals up is going to get pushed into the balance sheet column. So I'm going to just do a formula. So we're going to do equals this or equals this. So everything from withdrawals up is going to go to the balance sheet. And then everything from revenue down is going to go to your income statement columns. And you'll see my formula is exactly that number. So you just carry those numbers exactly. There's no change. So you literally just take this section and push it over. So income statement numbers push to the income statement, and then these top numbers push over to the balance sheet. This column is really more appropriately titled Balance Sheet and Statement of Owner's Equity. Go ahead and modify that. Okay, so now we're going to, again, do totals. So I'm just going to carry this all the way across. This is just a sum formula, so it's just adding all the way up for all of these columns. And now you'll see we're out of balance. And that's a good thing because remember that when we're in the income statement, our credits are revenues and our debits are expenses. So if our debits equaled our credits here, that would mean revenue equals expense, which would mean no net income, which would be sad face. We don't want them to be equal here. So that's good that they're not equal. So what we're going to do, you'll notice this line is called net income. We're going to take the difference. And usually you add the difference below the smaller number. So we're going to take that 310 and subtract the 235. That's going to give us $75. So it's revenue minus expenses. That means we have net income of 75. So then you're going to take the 75 plus the 235, your prior total, to get a new total. And then same thing over here, we're just going to take that 310 down. So this bottom line is called totals. You can see that right here. And we have these new bottom line totals over here. So with net income, now we're in balance, 310. So we're going to do the same thing over here. So we're going to take the 275 minus the 200. That's going to be 75. And then we're going to add. So you're going to take that 75 plus the 200, which will give you 275. And then you're going to carry down this 275. So now again, we're in balance, 275, 275. Very important to carry that number down. And you can see these two net income numbers are the same. So as long as these two net income numbers are the same, then your worksheet is in balance. All right, team, so that's how you do a worksheet. Make sure all the way along debits equal credits. That's the really important thing. And then make sure your net income numbers are equal. And then remember to carry those two numbers down.